Milken, Jane, you have so many people with two buzzwords, and it's inflation and recession. How bad can it get? What are your clients telling you?
So I travel around the world a lot, and I think what I'm picking up is there's a very different picture depending where in the world you are. I'm more optimistic in the States. When I speak to our clients, the labor market is strong, their balance sheets are in good health, the consumer, despite some challenges, has still got a lot of liquidity in their back pockets. So I think on the US side, there's much more resiliency. And we're going to have to go to inflation hard, but recession is certainly a possibility. But I think Europe's the one I'm more worried about, where you've got much higher energy price shock coming through. Supply chain is hitting them more. The consumer is not as resilient. So Europe is the one I'm more concerned about.
So let's pick up on that, because you were just in Poland and you really saw firsthand the fallout from Russia's war in Ukraine. How do you see the economic toll specifically rippling through the region over the short term? Because a lot of people say that Europe is already in recession.
Yeah, I think in Europe you've got a number of different dynamics. The first thing I'd say is we're at the beginning of seeing what the second and third order effects are of the horrific war in Ukraine. And you're starting to see it in terms of, obviously, energy supply. You're seeing it in terms of supply chain challenges. And the inventories were holding up, but now they're starting to be depleted. And it's very tough to name a commodity that Ukraine and Russia are not a major exporter to the world in. But yes, Europe's a bit more of the epicenter because the supply chain will hit them first and the energy side is tougher.
And one of the things we talked about in our panel this morning is the fallout and the unintended consequences, including the weaponization of finance.
And that's so interesting. It's certainly what a lot of people are talking about here. How do you see the weaponization of finance playing out alongside the weaponization of energy markets here?
Yeah. So if we look at what's going on in the world, we're separating a G20 country from the financial markets, and we're separating them from the supply chain in response to what they've done. Completely uncharted territory for financial markets and for many of the different supply chains around the world. And why weaponization? I think because it's sending a lot of concern to many other countries around the world, that what they're seeing is the potential that if something bad happens in a different geography, will this get repeated again? And they're concerned about, therefore, putting all their eggs into the Western financial order basket. They're going to look at diversification, and this will drive the development of an alternate financial systems and venues, be it SWIFT, be it payment systems, whatever it may be.
Do you find a hesitancy of more countries, more companies in different countries being hesitant to work with U.S. banks for that reason?
I don't think so, because of the capabilities that we have. I never underestimate America. Do not underestimate the American entrepreneur. Do not underestimate the financial innovation and the investments here. So I don't think it will, but it certainly makes it for a changing globalization as we know it.
I want to move to China, because obviously you have a massive presence in China, which means that you see things happening before so many other people do. The government is doubling down on COVID-0, no matter the costs of doing so. What are your employees, what are your clients telling you about what they're seeing on the ground and the economic damage that it's doing?
So I think the most interesting pieces are what our clients are telling us, and we're helping them with on supply chains. Generally, you do not want to have single sources of dependency anymore. You're trying to build that resiliency. The just-in-time becomes just-in-case. It is very hard to move away from China. And we're seeing that. Chinese imports to the US have been rising, not falling, despite everything. Why is this? Scale, efficiency, and they're very, very good at a lot of what they've done. So take footwear. I'm a mother of teenagers. They care about certain of their footwear. It's going to take 5 to 10 years to move that supply chain from China to India. Why is that? Scale, efficiency, quality of production. it takes some time for this to occur. So I think what the new normal in supply chains is going to look like, it's a 5 to 10 year journey. It's not a 1 year one.
It's fascinating because you're automatically identified, Citigroup is, with being a global bank, one of the most global, the most global from the US. And the downside of that is if there's a crisis somewhere, Citi is feeling that too. Do you see from where you're sitting, are we facing the unwind of globalization?
So ironically, if you're a global bank and you're in 100 countries like us, it's actually an opportunity because we help our clients navigate that crisis and we're there for them on the ground as well as elsewhere. And it's actually usually a time you shine. What we see in terms of, from the client perspective, it's a shift. So they're wanting to have more resiliency, more duplication. We're onboarding new suppliers for clients like you wouldn't believe. We move $4 trillion of volume daily in our cash management around that world. That number's going to double before very long. So globalization, certainly there's areas it's retreating. It isn't dead, it's just changing. And I think America, again, plays a very important role in making sure we've got very efficient structures to manage that.
What about some of the specific businesses that you're looking to exit? Poland, China, Mexico, Russia. Are these divestments a 2022, a 2023 occurrence? I mean, how soon can you exit some of the places that you've been looking to exit?
So there's a shift in strategy in those geographies. We're staying in those markets, particularly for our multinational clients and our investors, and we're often the major international bank on the ground there. So this is for our retail bank. I firmly believe the right strategy for Citi is to focus on where we can truly excel, and where we truly excel is supporting our institutions as their preeminent banking partner where they have cross-border needs. We're getting a move on. We're divesting our consumer franchises. We've already got signed deals for the overwhelming majority of them. And so we look at China and Russia and Poland that we're working on actively. And then Mexico we just announced recently, and we're already in the market. So this, we're a firm on a mission. We're on a multi-year journey, and we are getting on with it.
And the reason we ask, of course, is because your strategy is tied to your stock price.
Yeah.
We've noticed that Citi's stock is trading well below book value, the only big U.S. bank to do so that's not above book value. As CEO, how do you read that? Because the most extreme way of looking at it is that some investors believe that the bank is destroying value.
So we're on a multi-year journey, and I've tried to be very clear with everyone around it. We've done a major repositioning and a refreshment of our strategy. We're excited about it. We've got 5 businesses. Several of them are ones where we're already a leading player in markets, as well as in our transaction services, and others are real growth businesses with very high returns against them. So wealth management being example, commercial banking, transaction services, security services. So we're changing our business mix. It's organic, it takes some time. And then we're also driving a change in our culture. And as I say, it's a multi-year journey. We're very, very focused on making progress. I'm delighted with the progress we're making. We have more to do, and we are determined to get this right.
Rather than asking you for a timeline on when this could happen, what would it take for Citigroup to start trading at or above book value?
I think part of it's going to be proof is in the pudding. Our management team is very clear-eyed about what we need to do. I think the street wants to see us making progress. They want to see us striving towards addressing some of the regulatory issues we've had. Delighted to have the AML consent order from the OCC closed. And it's one step in front of each other. We need to make progress. We need to build, keep on building one foot in front of the other for the street. And I think that will help.
Culture. I want to shift gears now to social issues, because I imagine it must be pretty frustrating to be caught up in the middle of U.S. culture wars. I mean, your muni business was affected by your stance on guns, and now Republicans are demanding that the House drop its use of Citi credit cards because of your employee health care coverage, which includes covering abortion-related costs. How frustrating is that for you?
Oh, I don't view it as frustrating. I frankly, as we come out of COVID, I sometimes wish I'd had the e-school not the B school degree, because the E school is around empathy and it's around listening to people. And it's about, I think at the moment, a very divisive world. There's extreme views, and it's so important to listen to everybody. We have 220,000 employees. We listen to them. What are their concerns? What are their needs? The same with our customers. And we try and make sure that we are trying to solve the problems that matter to them. And that I view as an important role for any corporate these days. But the most important piece is actually to listen to what's going on, be in tune with the times, and try and make a difference on issues that are important to your people and your clients.
What does it look like in the background? Presumably, Greg Abbott or Ron DeSantis doesn't, take an action against a company without having conversations with them first. What does the back channeling look like when it comes to dealing with governments that may not like your stance on certain political issues?
Frankly, I think it's with all things. We respect everybody's view. Everyone's going to have different points of view. So when you are respectful and you are listening and you're trying to understand the different perspectives, it's remarkable what a constructive conversation you can have. So I would say the dialogue many times with different emerging market governments around the world as they try and make progress with their societies. I think companies can play an active role in that, and a positive one, without getting entwined in the politics, but just focus on driving progress.
I want to stick with the social issues because protesters have been pushing Citi to limit loans to the fossil fuel industry. I know that you see climate crisis as a priority, so explain why a meaningful retreat from the industry is not happening for Citi right now.
I think, sadly, where we are is there is a very real climate crisis. We need to accelerate the transition to cleaner energy, but it is simply unfeasible for economics or economies, for human beings and their livelihood and well-being, to shut down the fossil fuel industry. It would be a catastrophe today. So the goal here from all of us is, how do we accelerate the transition in a responsible manner that doesn't cause a major economic crisis? And I think we're seeing this live in Europe with the Russian crisis. The key piece here is, as a bank, how are we helping accelerate the move to the new cleaner technologies and cleaner energies, and helping our clients make that transition? We can't do it alone. We need the consumer there, we need government policy there, we need our clients to do the same, and we're trying to be the active voice to encourage that to happen. It's got to be orderly. We can't have a major energy crisis, which we may have for other reasons, we're looking for the win-win here.
Jane, before we let you go, we started with talking about Poland and Russia. I want to ask you about how soon you can get out of Russia, given that it's most likely that sanctions can prevent a lot of the potential buyers to buy that operation.
Well, we're selling our consumer and our commercial banking franchise on the ground there, and we're in active dialogue around that. And then what we've also been doing is focusing on helping the multinationals on the ground, because a lot of our client base are the Fortune 500. They're names that we all know, and many of those are looking at exiting. You can't exit if you don't have your bank on the ground there. So we've stopped soliciting new business, new clients. We're clearly shrinking down our exposures, our business. We've got number one priority on making sure our people in Ukraine are being looked after. But you're kind of the captain who's the last one off the ship, because we can't help other people with their own programs to exit if we're not facilitating them. And that's how we look at it.